first. For more on the precious metals markets, we're joined by David Baker. His Baker Steel Gold Fund has almost doubled over the past 12 months, beating more than 90% of almost 300 hedge funds in the Asia-Pac region. Dave, congratulations, well done, and good day.
Thank you.
Have the long-term fundamentals for gold and precious metals changed? I mean, in light of the dollar's rebound, the credit tightening, and as governments exit from stimulus policies?
No, I think we're still very positive on the gold market. I think the debate's still out, about the stimulation that's going to be needed on these economies. I mean, information coming out of Davos is suggesting that commentators are getting a bit more bearish on the world economy, and we're going to have to see more stimulation in those economies, and which will mean more printing of currencies, and that's going to be very positive for the gold market, we think.
So gold as a hedge in this instance. So is it still a buying opportunity, especially for those who have missed a rally? Have we really missed a rally?
Well, I think that what we've seen is that we saw the Indian central buy gold around that $10.45 an ounce. They bought 200 tons from the IMF. There's still around another 200 tons of gold that they have to sell. Wouldn't surprise us if, India and China are actually standing in the wings ready to come back into this market. We can see that the physical market's definitely improving. News out of India is suggesting that physical demand in January has rebounded quite strongly. And so the physical market's basically getting used to these prices, starting to underpin the price. And some of the froth is coming out of the market, as we saw yesterday with the comments out of George Soros, indicating that maybe gold's in a bubble. I mean, that would suggest that maybe he's out of his positions, if he ever had positions in gold.
So in terms of pricing, where do you see gold headed? We have a guest who will be coming on the show later today saying that gold may get to 2,000 in 3 years. Your own predictions?
So I think gold is going higher. It wouldn't surprise us if gold got to 2,000 in 3 years or 2 years maybe. I mean, there are a lot of issues in the world economy that have still got to be dealt with, and particularly the very high debt to GDP levels. And the world is potentially facing a very deflationary environment, and to devalue that debt, the governments are going to have to print a lot of money. And in that scenario, which really is the only scenario we can see, is that gold could go to, any number basically you want to see, whether it's 2,000, 2,500, if not higher. I mean, we do believe we are in that situation.
Dave, you mentioned earlier that your fund's done really well. We're curious, have you made any adjustments to your portfolio recently? Have you trimmed, sold any of your positions?
We've added a couple of new positions. Allied Gold in Australia was a fairly small position, but we took part in a big financing in the late last year, and that's now moved higher. Centerra Gold we've been adding to. But, we had very strong performance last year. This year, I think we're flat for the year so far. So, we're doing okay where the market has been a bit weaker. But we're value investors, and we're looking for that value, and we're still seeing good value in the market, and particularly in our scenario where gold does very well. We think that these shares are very under-owned and very cheap.
In terms of your exposure, I'm taking a look at it here. It's gold followed by silver, then iron. Why in that order?
We're predominantly a gold fund, so really we're buying gold as an alternative currency, and gold shares as a way to play that. Silver, we do like silver. I mean, silver potentially could do as well, if not as better than gold, but it's very hard to gain exposure to the silver market through the silver equities. But really, we're giving our clients exposure to the gold market.
We're getting lots of questions from our viewers asking what really is the best way of getting exposure to gold. How attractive are physical gold investments like bullion, coins, or ETFs?
Well, the ETFs have done very well. I think they've been very, very successful, and they've been very, very popular. But you're buying physical gold effectively buying physical gold through the stock market there. Gold equities are higher risk, and potentially they should generate higher returns. And our fund has managed to do that over the long term. But I think you have to probably have a combination of physical gold and gold equities. But you really want to, if you play the gold equities, you need to be in a managed fund. It's basically a minefield out there. There's a lot of traps for the average investor.
So investors have to be cautious. Now, many of your top holdings are gold producers in the small as well as the mid-cap space. Why do you prefer such smaller companies?
Well, we believe that the challenge for the large companies is to grow, and there was some research out overnight looking at the large companies, and although they're producing a lot of gold, they're not generating a lot of free cash flow. And they are struggling to grow. And those companies, we believe, will have to buy some of the smaller companies, particularly the small companies with very good assets, to continue the growth or to promise the growth that they need to deliver to their shareholders. And we think there's more leverage in some of the small companies. But we're really a intermediate to mid-cap bias, really, is we're looking at. We don't want to go too low down the food chain, but we are looking for the best assets, and the best assets really at the best price.
And looking at some of these stocks, they've already had huge gains. I mean, look at Archipelago, up more than 600%. Oceania up nearly 400. Samarfo has almost tripled. How much more upside do these companies have?
In the case of Oceania, we think there's still some very good upside in Oceania. It's increasing its reserves, resources, and the hedge book is basically maturing this year, so it's going to have a lot of free cash flow from next year. In the case of Archipelago, the company is looking at some financing to develop its gold mine in Indonesia, and that gold mine is a very attractive gold mine. It's a very good grade. It's going to be exceptionally profitable. So we still think there are good upside in some of these stocks, but not all the stocks. We are quite selective in what we're buying.
All right, before we let you go, Ali, you were talking about takeover targets, potential for them to be takeover targets. Any possible suitors that come to mind?
Well, it's what we're seeing in North America, particularly, is the large companies. They've been buying some of the copper gold companies or copper gold deposits. Basically, they're struggling to find the very, very big pure gold projects, so they're looking at buying copper gold projects. And so we've been buying some of the copper gold projects around the world, and one, for example, down here is Highlands Pacific, which we think has a very interesting asset in Papua New Guinea.